Most traders think green candles means that buyers are in control, but that's only half the story. If you want to trade like a professional, you need to go deeper. You need to know who's exactly stepping in. And for that, we use the cumulative delta. In the next 10 minutes, I'm going to walk you through how to install it, how to read it, and how it fits in directly to the VWAP Wave system that I trade live every day. We'll cover divergences, absorption, bull and bear traps, and real setups that help me and my community hit successful trades with serious conviction. We're also going to clear up the confusion between TradingView's version and the real deal you get on other platforms. One is helpful, but the other is deadly accurate. Big difference. Let's jump into the charts. First, let's talk about TradingView. To get cumulative delta on your chart, open the Indicators tab and search for cumulative volume delta. I recommend using the included tool for TradingView right here. But here's the key thing to understand. TradingView doesn't use exchange level bid and ask data. It uses aggregated data from brokers. That means it can show you general directional flow, but not the exact footprint of aggressive buying versus selling. So use it for bias, but not exactly execution. Now let's switch to Tradovate. This is where you get the real stuff. Click on Indicators. Then we're going to go to the volume based and click on cumulative delta right here. We're going to use the default settings. You can also add the delta histogram in the same section under volume based, and this will give you bar by bar insight. Now this version reads the actual bid and ask volume straight from the exchange. That means when you see a spike in delta, you know real buyers are hitting the ask. When you see it stall out, that's real sellers pushing back. If you want to scalp based on order flow, this is non-negotiable. So how do we actually read this? The cumulative delta rises when aggressive buyers hit the ask, and it falls when aggressive sellers hit the bid. If price and delta are moving together, that confirms the move. But if price is pushing up and delta is flat or falling, this is what we call a divergence. It means buyers are running out of ammo. I like to think of price as a boat and delta as the current. If the boat's floating up, but the current is pulling back, you're about to drift downstream. Now, let's also talk about the delta histogram. Instead of looking at cumulative pressure over the entire session, this is going to show you who won each individual bar. Did buyers dominate this first 5-minute candle, or were sellers absorbing it? This is where we see things like absorption. Imagine a big green bar with heavy position delta, but price doesn't go anywhere. That usually tells me it's a trap. It means someone just bought the top. You can use this bar level view to time your entries, especially on a pullback or trap candle. Here are the general top signals I look for. Signal number 1, divergence. If price makes a new high but delta doesn't, that's your early warning sign. Signal number 2, absorption. When delta prints big volume but price barely moves, someone's absorbing every single aggressive order. And lastly, signal number 3, trap bars. When delta spikes one way and price quickly reverses, this is usually where smart money steps in to fade the retail breakout. So how do you actually use this inside the VWAP Wave system? Let's say we're watching a price discovery continuation setup. Price breaks out above the VWAP value area. I want to see cumulative delta rising and confirming the move. This tells me that buyers are still in control. On a fade value area extreme setup, I'm watching for divergence. Here you can see price tags the upper standard deviation band, but delta is fading. That's a high probability fade. For return to value, I want to see the delta shift. Maybe we had strong sellers, but now delta flips and turns positive. That tells me that this initial breakout failed and the price discovery is probably going to bring it back to value. Value is ultimately pulling price back. Here's a real trade we called out live in the Discord. NQ was pushing into the one standard upper deviation band, but you can see here that delta was beginning to give out hard. The histogram showed 2 trap bars, and I shorted on this second candle as it rejected the upper band. This trade snapped all the way back to VWAP within minutes. Nice significant winner in less than 10. And it wasn't a guess. This is structure plus order flow, and that's how we do it. If you want to start using these tools the right way, the best first thing you could do is download my free VWAP Wave course setups guide. And if you want to see trades like this happen in real time live, be sure to join our free Discord. And if you're really serious, come trade with us inside the premium room. We break this down live every single day, and we don't just guess, we trade the structure. Be sure to like this video, hit that subscribe button as we continue to create videos just like this. See you in the room.